Hello, how's it going, everyone? Welcome back to mentfx. So if you just saw the last video, we were looking at the idea of fractals in the market from much higher to much lower, and how really time frame doesn't matter if you're able to start noticing liquidity being formed in the market, the moves through them, the moves away, understanding this whole move here was most likely an order block, the move into that order block, giving you more accumulations on a lower time frame within those areas, and those continuations higher in the form of reaccumulations until you can start expecting or seeing distribution occurring, at which point you can be watching for certain things. If they play out, then you can start taking the sells down, right? So how can this be employed or done basically from a higher time frame analysis? So instead of doing a top-down analysis, I'm going to do a quote-unquote top-down analysis off of one pair and talk you through how you can think about it using every single concept you have learned thus far. So if you're a little bit confused right now, please work your way back through some of the videos, because this might become a little confusing if you haven't made your way through inefficiencies, through order block creation, liquidity creation, all that other stuff that we cover in the masterclass earlier on this channel, right? Or if you're part of the mentorship, then you've most likely understood a lot of this, and we've covered a lot of this, but this will act as another material for you to study as we work, as we continue to grow. Okay, so let's open up EuroGBP, because EuroGBP is what I was looking at and think would be a great exemplar and case study for a lot of you guys, especially since it's happening somewhat live. So let's go to a monthly, because that's when I did my analysis, and I spotted this on a monthly, which is very great because it will allow us to see almost everything that we need to see concerning how to trade it and expect. Okay, so we're on a monthly chart, and what do you see the second we jump onto a monthly chart, right? Most likely seen this before, but this is nothing more than a basic reaccumulation. So we're going to talk quickly about why it's a reaccumulation, how it's a reaccumulation. We're not going to get too deep into it. We're going to talk a little bit about volume, because it's important here. A lot of people in the mentorship are about to learn about how we use this, determine it, but you guys will get a little bit of a peek into it as well. And I'm going to do my best to explain it in this video. So as we can all see from, first of all, again, forget the fact that we are on a monthly chart. What's important is that you realize this is a fractal market. Everything that occurs on the monthly will occur on the daily, will occur on the 4 hour, will occur on the 1 hour, on the 1 minute, the 5 second, the 1 second, the 0.0001 pip tick charts, whatever it is, it will occur, right? The idea is sometimes it'll be easier to spot on higher time frames. Why is it easier to spot on higher time frames? Because on higher time frames, it's very hard to hide the notion of institutional order flow. Why? Because when institutions get involved, and they get involved with such heavy volume in the market, there's going to be footprints left. And the monthly chart takes billions upon trillions, gazillions of dollars to move. So when there are movements of such sort, and movements of such sort, and movements of such sort, which we're about to talk about, you can be very convinced about what smart money is most likely looking to do with the markets in terms of order flow. Okay, so we had this long-term, again, we don't have to go too far back on the left, but you can see that on the monthly, at least, we had an accumulation schematic here play out perfectly. Okay, not like the perfect one that you see online, but it was a beautiful accumulation schematic that gave you the spring, the test, the LPS, right, and then that reaccumulation, like a mini one, and then this huge markup. Okay, so we know there's Wyckoff here. Again, they're like snowflakes. We can see Wyckoff. We don't have to label it, but there's Wyckoff here. Okay, we move up, and as we move up, we create the preliminary supply, the buying climax, moving that down to the automatic rally, the secondary test, right, creating some liquidity, right, and all of a sudden we start dropping. We make a secondary test, testing this order block, as you can see, moving away, making some kind of trend line, moving away, making that STNB, which basically is testing 50% of this inefficiency, pretty much. Right, so if we want to look at it, it's about 50% of that inefficiency, taking and liquidating these lows here, right, and then moves away, coming up to this order block, forming, again, what? Testing that trend line, making that third high again. Now, what is this entire area? Well, now we understood that this is not just a buying climax as part of a overall, right, distribution that goes lower. This buying climax is instead the buying climax that forms a selling climax, which actually forms the reaccumulation, aka a distribution, right? So as you all know, an accumulation can become a redistribution, and a distribution can become a reaccumulation based on how you can be expecting or what you can be expecting from price. So price is moving in between this creek, and if you saw the last few videos, we spoke a little bit about this creek and what's happening inside this creek. As price is making lower lows and lower highs, volume continues to either remain stagnant or even decrease. Now, what is the telltale sign of what's occurring there? Well, that means that there is a consolidated area of price in which lots of people are most likely selling, whereas smart money is accumulating those sells. Hence, the no volume in the time span that it took to get all the way down here. Like, notice how long it took to get all the way down here and how quickly we came right back up. This right here on its own is telltale signs of what order flow institutionally is telling you. If you really want to know what institutionally order flow is doing, just look how long it takes you to get down and how long it takes you to get up. If one is more than the other, then you know you're either bullish or bearish from an institutional perspective. Now, that said, we have this reaccumulation playing out where we have the preliminary supply, the buying climax down to the automatic rally, the STs, right? We're forming that liquidity. We start forming this trend line of liquidity, right? And what happens? We have that final push down, getting many people involved, right? So we have this below, this move down takes out all these lows in the market that we formed here. Again, what's happening? This starts looking like support for a lot of retail, even for, since we're on a monthly, not just retail, but retail banks, right? Because guess what? This game isn't just played between us and smart money, right? Smart money is after every big bank, every commercial bank. Any bank that's smaller than the main composite man bank is getting targeted by this, right? So those banks or hedge funds or even private wealth management funds that have orders resting at all of these support areas are actually getting liquidated when this here occurs. So this liquidation occurs breaking out of this area. Lots of people are looking to sell. And as you can see, we tap into this final order block, this tiny little area right here. That's the reason for this movement. Again, we weren't involved here. Of course, if we were looking at it on a much lower time frame, we probably saw great accumulation there, or a nice Wyckoff accumulation, or even a nice order block creation, the test of that order block, get an order block 2.0 and get involved on that. We didn't get involved on that. That's fine, right? We formed that spring. We might have already made the test. We don't know yet. And then we have this move away. Now, again, we're still on a monthly chart, right? And we have that much information just out of one time frame. So imagine if you had that much information to keep on going down in time frames and continuing to refine certain areas and understandings to get yourself involved. You start to see that it becomes much easier. Now, just from a basic perspective, what happens? We move away, forming this order block right here and this order block right here, and moving away, right? And what's inside those order blocks? Well, look, there's imbalance. So most likely in the future, right, we want to see price get into here to make that test of the spring before going higher, or to make that last point of supply. Also, we could see it come down here and make that test, right, going higher and making those LPSs that move significant and that move price significantly higher. And that's where institutional order flow is lying right now. So we know that institutional order flow, most likely, based on the footprints that we are seeing in the market, are bullish on behalf of the composite man. Now, why is this important? So what's interesting about the video that we're having right now is that we are not going to go down any time frame. This is as much analysis as we're going to use to understand almost everything that most likely is going to happen in this market, from my perspective at least, or from the composite man institutional POIs that come from what I believe to be institutional POIs, right? So this is just so I don't get sued. So this right here, right, we can already see it, equal lows. What's happening here? People are getting involved to be buyers, right? We have liquidity below here. Okay, cool. So we know that liquidity wants to be breached. If that liquidity gets breached, where's price most likely to go? To fill in these inefficiencies, hitting these order blocks, and potentially accumulating on lower time frames in here to go higher, right? So we can already see that. So if we know that price wants to go lower to take out these lows, then we need to understand where it might go before it gets there. Right, so again, we're still on a monthly chart, but we can already start to see fractally what the lower timeframes are going to do. This is why when people ask me, what time frame do you use? I answer them, it doesn't matter, because once you understand order flow and the creation of liquidity and the creation of inefficiency and the price movement from inefficiencies to inefficiencies, you stop needing to worry about what time frame you're on, because you can see the movement on every single time frame. So we know that this area of consolidation that is occurring right now is actually an area of accumulation and distribution. That is very easy to tell, especially if you've been studying Wyckoff for a long time, right? Like we said, there's snowflakes. There's accumulation and distribution here. Now we know it's accumulation. There's accumulation or distribution here. Now we know it's distribution. There's accumulation and distribution occurring here. Now we know it's accumulation, right? We can find those signs though by diving deeper into price, seeing what's getting Liquidated. What's getting tested? Where's the momentum in the market? Where's the testing? Where's the momentum? What's it testing? Where's the momentum? And as you do this, you'll start to notice things and you'll start to get much better at spotting what to expect. Now, looking at this, if we know there's equal lows here and they need to be taken, then we know that we're most likely in a distribution, right? So on a lower time frame, we can already see potentially we had a preliminary support, or this is preliminary support. We don't supply. We don't know yet. Buying climax, automatic rally, secondary test, right? Up thrust to the secondary test, making equal highs, and the UTAD. So most likely than not, we have had a distribution schematic play out within this long-term reaccumulation, which was a distribution at first. So if that's true, then what do we expect? Then we expect tests of this area. And as you can see, we already got the test of it because what's inside of this wick? Well, on a lower time frame, we know because we understand order flow that there is a move up and a move down. That did what? Took out the liquidity above these highs, also known as the upthrust of the schematic. So we took those out, and then what do we expect? Price to come and mitigate the open, right? Because why? There's negative orders that they need to mitigate, or the 50%. Now look where it mitigated. About the open, which was probably around here, right? And the 50%, which it did mitigate right there. As you can see, that 50% mitigation. Now, just looking at this on its own, inside of that, this test of that UTAD, potentially, is another Wyckoff in itself, right? So we're expecting lower prices to take out these lows. Now, we are not a bank, and we don't have millions of dollars, billions of dollars, trillions of fucking dollars. So we can't just wait for price to get here and then buy a fuck ton, right? And then wait for price to maybe get lower and buy a fuck ton more, expecting for those higher prices. Instead, we have to basically refine our understanding and understand what's happening inside so we can get involved on all the movements in there. So again, this video, we're not going to go at all to any lower time frames, but we're going to form an entire opinion about what we can expect, or a bias, what we can expect in this market, right? Based on the concepts that we have learned and the arsenal of tools that you have available to you now using, right? Liquidity and efficiency, Wyckoff, and all this other fun stuff that we're doing. So we have liquidity formed here. We finally have that move through liquidity here, but look what this move did. It formed liquidity here, right? So these equal highs now. So there's two things that this market could do. It could either break above and then break down, or it can finally start to break down into these areas, accumulate, right? Hence the where to expect accumulation off of these higher time frame order blocks, right? Or come down here, accumulate, and then come to take out these highs all the way up here. So that could very well be the thing it wants to do. Now, if that's true, right? What do we have on lower time frames? If we zoomed in, right? So this is the equivalent of zooming in, is the equivalent of seeing a lower time frame. But again, on lower time frames, we'd see much more. What's here? Well, there's liquidity here. And look at this down move before the up move. This is an order block. So if we denote the open and the 50, you'll see that we can still come into this 50%. So there's going to be buy opportunities most likely at this area when price gets here to liquidate these positions before going higher, before then going lower, or before going higher, taking out highs, before coming lower to get that test or that last point of supply before getting higher. Most likely though, based on institutional order flow, we could expect lower prices. So again, we're still on one time frame, and we've basically written a novel about one time frame. So if we can do this on one time frame, imagine what we can do as we get lower and lower. Your understanding of this is infinite. It can get super, super deep. And as it gets deeper and deeper, you get to the lower time frame charts if you want to. Or you stay on the higher and you just have a ton of money to throw at it. It doesn't really matter. Idea is, here's your UTAD, here's your test. Most likely than not, we're going to have this move down. That's going to come to start fill in these inefficiencies, right? And if we start getting that move down, we can start to look for redistributions on the way down to get into here, at which point, what happens? We form liquidity, accumulate, and do what? Breach that liquidity. And all of a sudden, retail again is confused by what is occurring in this market, right? This is how you can use one time frame to decipher what's going to occur on almost all the others. So off of just a monthly chart, we already recognize that we are expecting, right? Most likely something along the lines of that, right? And again, it might not be perfect like that. We might have that move up, that test, that move down, right? That test of this order block, that will give us some movement away. But because we have long-term down movement, we'll have some kind of redistribution in here, right? The move down to here, we'll have some liquidity formed right before the lows, right? We come in, we maybe make some springs and move up. We test those springs, right? We continue higher, breaking structure. What do we start doing? We start to create equal highs along the way up, right? Reaccumulating, testing, continuing higher, right? Stopping just before the high, making what? More people believe we're probably going lower, and all of a sudden, we breach them all out. Now, again, this bias is not set in stone and can be changed. If we see price start taking off, then we start to expect a completely different thing. That's fine. The point is, we can have a bias. One of the most important things that I talk about in my mentorship and as part of a checklist is that you want to determine a bias. And once you have a bias, you want to stick to it and find confirmations to your bias on lower time frames and get involved on those until your bias is swapped. When the bias is swapped, then guess what? You have a bias that you can now begin to look for confluence for. Now, what's interesting is as we were looking at all this, guess what? This entire creek, as we were making those lower lows, right, was making lower volumes, stagnant volume, almost nothing. So you know that it was made for the purpose of accumulation. All the orders in here that were basically sold on behalf of much larger funds and private wealth, like stuff that governments, central banks, stuff like that, that we don't even have to worry about, are being accumulated by the composite man, whoever that might be. Maybe it's JP, maybe it's Citi, maybe it's BOA, maybe it's another bank, maybe it's banks working in tandem. Doesn't matter. The point is, that's what's occurring. We have the spring that liquidates all those people, and we have that move away. Now look what happens as we begin to print higher prices, right? So higher prices are being printed. We're getting higher highs, higher lows. And within the same time that it took for this to develop, it only took this much to get back up there, right? So we know institutional order flow is most likely bullish. And look what's happening to volume. Volume is increasing a lot because it's moving a lot more, which means that we finally transferred all the supply in this market, or all the sells in this market, into demand, aka buys. And now the demand is controlling the movement of the market, right? And you can expect things like this from a bias, right? And this is all expected off of a monthly chart. And if you do this and you walk yourself through and you basically write a novel for yourself to each time frame, to each expectation, to each POI, and watch that area for what? The same footprints of everything we've basically learned in this mentorship, then you will begin to spot moves significantly more often. You'll start to anticipate moves before they happen, and you'll be able to get involved in those moves as a real trader. So again, this is all perspective based, but this is how you could expect certain things in this market. So thank you so much for watching. I hope this opened a lot of your eyes, or at least helped you see something that you might have not thought about, or maybe you knew about it subconsciously but never really thought about it before. Hope this made a lot of sense. I look forward to everyone that's in the mentorship for the Sunday webinar. I hope this made. If you guys have any questions, please let me know in the comments. If you liked it, leave a like. If you disliked it, leave a dislike. And I'll see you guys in the next video. Thank you so much. See you guys.